Hello and welcome. You're watching Your Trades. I'm Kavita Thapliyal. With me is my colleague Mansi Dave. And Mansi, a bravo session in the market. Totally all shares, and we closed above 25,200. Not only the major indices, but even the broader market totally participated in this rally, and a session where a lot of optimism, which we hope continues in the coming days as well.
Absolutely, that's the hope, Kavita. And one such session which I like, where the indices were performing, the sectors were performing, and of course the stock specific actions were also there. Talking about the levels 25,200 and above, we were constantly trying to take that level, which was 25,200, and sustain there. While we closed, we were above it with a whopping 200, almost 200 points upsurge on Nifty. At day high, we did see the index trading during the session. Also, Bank Nifty was performing during the session, and good around 250 to 300 points of an upsurge, which we did see in Bank Nifty, while it closed at 55,150, nearing that level. And the broader markets were also performing and shining in trade. We have good set of news flows, good triggers coming both from the global front as well as domestic fronts. And can't forget that the US-India trade negotiations are again on the table, and the talks are ongoing. We can expect something from there as well. So all good news and flows, and the markets are cheering it all, Kavita.
Absolutely. Let's bring on the experts as well, and let's figure out the sessions coming up ahead and the strategies for our viewers. We are joined by Ajit Mishra, SVP Research, Religare Broking. Ajit, hi, afternoon, and welcome to the show. As you were discussing in the morning, it was very important for the markets to hold on 25 for 200. And Ajit, despite it being an expiry day, look at the markets and the way they've turned out. Even Bank Nifty, closed up almost more than 250 points. Advances 1857, 970 decline. So a good number and a good setup for tomorrow's session. How would you like to analyze this?
Good afternoon, Kavita. Good afternoon, Mansi. So yes, we couldn't ask for more. Means all sector participating in the move, like what Mansi shared, and broader indices also continuing with the same trend. Themes which were sitting on the sidelines, which were seeing in fact a corrective trend. Defense and railways, they have also started participating. So everything looks in sync. And last time, like what we discussed about the two key sectors, banking and IT. So IT last week, we saw some traction, and this time around now, the banking has surpassed the 55,000 mark, the key hurdle which we were closely eyeing. So with all in place, we believe that this recovery is here to stay. And next, we are targeting 25,500 in the Nifty index. It's a buy and dip markets. Definitely, you can continue to hold your existing longs and look for any dip as a buying opportunity until Nifty breaks 24,900.
Stay conviction in the market, buy on dips kind of market, and 25,500 is the next level to watch out for. Yes, all of these are the levels, Ajit, but then if there's so much of positivity, what are the trading ideas for the session next?
So Mansi, by the end of the session, we were seeing fresh traction in Tata Steel. So we expect that metal counters alongside with the rate sensitive, they're anyways like performing well. And we expect this outperformance to continue. So one can accumulate or buy at current levels, when it comes to fresh long position in Tata Steel. 168 should be a minus stop loss, and 180 is what we are targeting as an immediate target. Next on the list, Chola Finance. After a very tight range consolidation, we have finally seen a decisive breakout with volumes in today's session. So we expect this move to carry forward, and 1690 is something that the stock should test in a day or two. So with stop at 1530, one can go long in Chola Finance as well.
All right, Ajit. So buy call in Tata Steel, the target of 180, and Chola Finance, target 1690. Thank you so much for sharing your ideas with us today. Thanks. And let's move on. All eyes will be on the much-awaited FOMC meeting, where the street is anticipating the first rate cut of 25 pips this year. Varun Dubey is standing by to tell us what more to expect. Varun.
Well, so the street is estimating a 25 basis point rate cut in the September meeting of FOMC. And after 2.5 years, that is after June 2023, this would be the first rate cut in the US markets. And the Fed range, which is around 4.25 to 4.5, will actually start moving down. And it is not only this time, street is also expecting a rate cut going forward. If you look at the Reuters poll of 107 economists, around 105 are expecting a rate cut in the September policy. And around 60% of the economists are also expecting a rate cut in the coming policies as well. So a total of around 50 basis point of rate cut is expected in the calendar year 2025, and that is 60% of the economists are expecting a 50 basis point rate cut in calendar year 2025. And also some are expecting further rate cuts in calendar year 2026. So they are expecting a total of 75 basis point rate cut from here on till the next year. So the rate cut cycle is again to start after 2.5 years. Now there are several factors which are actually leading to the rate cuts. No doubt, if you look at the inflation numbers, they are actually expected to inch up because of the tariff war that is going on. But yes, if you look at the other economic data points of the US market, especially the unemployment data, that is something which is actually worrisome. And if you also remember, during the Jackson Hole Symposium, the Fed chairman was actually sounding a little bit dovish, and also the street is expecting the overall unemployment data to inch up going forward in the US markets. And this is one of the important data points because of which street is expecting a 25 basis rate cut in the September policy. And also going ahead, you might see a series of rate cut in the US market. So after finally 2.5 years, that is Jan 2023, the rate cut cycle in the US market is about to start with a 25 basis rate cut in the September policy.
Absolutely. So all the eyes on the Fed rate cut announcements, and we'll keep an eye on the same. But then now we have Shrishti with us and telling us about the technical charts. And Shrishti, looking at the upsurge in the market, I'm sure we have all the breakout candidates today.
Well, yes, two breakout stocks that we wish to highlight for our viewers. Firstly, let's have a look at Canfin Homes, because we have seen decent moves on the real estate pack. Because Canfin Homes, if you see on the charts, the stock was up anywhere between 3 to 4% today. But what was interesting to see is that the stock was off late facing difficulty to cross that 750 odd mark. In today's trading session, the stock actually managed to take a support at its 20-day moving average, moved very well above its 750 odd levels, closed almost at 780, and is now trading above its all key moving averages after making a breakout from the falling trend line. So this is the first stock that we wish to highlight on the breakout side. But moving on to the next one, and that is Tata Steel, because slow and steadily the stock is actually on the higher spree. If you see Tata Steel on the charts, will you believe that it's already at its 52-week high level? And off late, we have seen Tata Steel consolidating in quite a tight range for itself. Today, of course, there has been a green candle for Tata Steel. It was indeed one of the top gainers on the Nifty 50 side and is now seen to be trading above its all key moving averages. So these are the two breakout stocks for today.
Thank you so much, Shrishti, for those explanation on breakout stocks. But then we move on, and Swiggy has launched a new app, Towing, for affordable food delivery options, and prices on the app range from 49 to a maximum of 250 rupees. Now we have compared Towing's offering to Swiggy's for you so that you know what is the difference. Anjali is here with more details on this. Anjali?
So Swiggy has launched a brand new app called Towing, which is going to focus specifically on affordable food delivery options. Now this is has been launched as a pilot currently only in few select key areas in Pune, and it will have offerings mostly in the range of 49 rupees till 250 rupees, which is largely the affordable segment. But what is it that is different between this new app versus the main delivery app that Swiggy has? Well, one is that there will be no surge fee on this one even during peak hours, and it will also attract a lower platform fee of rupees 12 versus rupees 15 that we see on the main app. And it will also have parity with offline prices, which means the prices that you will see on menu cards in restaurants is what you will see on this app as well. So those are the major key differences between the existing Swiggy app and this new app. We also compared the prices or the total final price that you pay for a particular item, and what we found here was that the same item was listed at 225 on Swiggy, whereas it was listed for 200 and then discounted to 149 99 on Toing. There was also a delivery fee of 41 rupees without a Swiggy One membership that was on the main app versus 0 on Toing, which has free delivery on orders above 99 rupees. Additionally, no packaging charges were levied, and the restaurant GST was also lower, given that the cost of the item was lower. And platform fee, again, we can see a 3 rupee difference, which comes out to a difference of almost 80% of a price differential was seen between Toing and the existing Swiggy app, which means that Swiggy is really going all guns blazing into the affordable segment. Now, there are a few things to set context on why this app has been launched. Sources told us that this is to largely cater to the affordable category, and in a shareholders letter, Swiggy had earlier said that they will ensure that peers don't get a clear opening, and they had also launched other offerings like the 99 store within the Swiggy app as well as Snack, both of which focused on the affordable segment. At the same time, we have rivals like Rapido that are entering into the food delivery space again with affordable options, with them asking restaurants to put at least 2 items under 150 and therefore lower prices on such platforms. Swiggy also has ownership in Rapido, about 12% that they are also looking to sell, which means overall Swiggy wants to make sure that they capture the affordable segment as well, and this new offering, this new app is a step in that direction.
Capturing the affordable segment is the motto, and yeah, we'll keep an eye on all the food delivery space, both the Swiggy and the Eternal. But then moving ahead, Gautam Duggad, Head of Research Institutional Equities, Motilal Oswal Financial Services, shares his views on staples and discretionary post the GST cut. He's bullish on discretionaries for over 3 to 5 years, and also believes the jewelry, quick commerce to see explosive growth. Let's listen in.
In consumption, we've had a long-standing view that consumer staples will underperform. We've been having a big underweight in our model portfolio on consumer staples for last 4 years. Our entire weight in consumption has been residing in consumer discretionary. So much so that in July, we removed the sole consumer staple stock that we were holding. Today, if you look at our model portfolio, the consumer staple has a 0 weight. Of course, they've seen a good rally in the last 30-45 days, but the discretionary segment is where we think far more excitement is visible. You have jewelry, you mentioned about food delivery, quick commerce. That is a segment which would see explosive growth in the time to come. So we've actually raised the earnings estimate for both these companies, both top line as well as profitability. And we've also raised the multiples that we are ascribing to these companies. So both Swiggy and Zomato, we continue to like. Swiggy, we have upgraded the rating. But hotels is looking exceedingly well. So I think if you look beyond the next 3-6 months, which is where I think staples could bounce back because they've underperformed for a very long time. But if you take a 3 to 5 year view, then I think in consumption, a lot more money can be made in consumer discretionary.
All right, so that was the take off from MOFSL. But then let's move on and let's talk about stocks in news. Our colleague Rabindra is there with all the details. Rabindra?
Well, as Shant were in focus in today's trading session, where Shant Semiconductor and Enora partners to expand trunky test and validation solution. Apart from this, Suzlon Energy were also in focus in today's trading session, where Suzlon Energy has won its FY26 largest order of 838 megawatt from Tata Power Renewable Energy Limited. Moving to next, Larsen and Turbo is also in focus on the back of their order win, where L&T Heavy Civil Infrastructure verticals has won significant order from NPCIL, and the order range is between 1,000 to 2,500 crore. TCS is also in focus, where ARN Media partners with TCS to modernize operation, skill digital engagement in Australia. And lastly, United Breweries were also in focus, where JP Morgan has come out with a note and they have maintained their overweight rating with target price rupees 2050. So back of this, United Breweries were also in focus.
Okay, Raminder, thanks for all of those stocks and news. Moving ahead, Maruti Suzuki was in focus during this session because the company has finally announced prices for its 19,99,000. Bookings for the Victoris have been underway and is exclusively sold through the Maruti Arena showrooms. Shrishti is joining with more details on the same. Shrishti.
Maruti Suzuki has come out with the prices of the latest offering, that is Victoris, mid-size SUV with a lot of first-hand features coming in on this particular vehicle. The excitement is all about the new features that Maruti Suzuki has come out with in this particular vehicle. But the other exciting fact is the pricing, because company has come out with quite an aggressive pricing, because the introductory prices is starting from just 10.5 lakhs but goes up to 20 lakhs, because in this wide range the company is offering multiple fuel types. It's not just the petrol, you will also get a smart hybrid, a strong hybrid, as well as the CNG offering. And it's also interesting to note that this is quite aggressively priced versus some of its competitors in the same range, from the likes of Creta, Kia Seltos, as well as Honda Elevate. But in terms of the cannibalization effect for Maruti Suzuki, we have been telling you on ET Now that the whole product revamp is underway, and Maruti Suzuki is planning to come out with very interesting offerings. Victoris is one, but in that as well, if you see the placing of this particular model, at least in terms of the pricing, it's actually in between Brezza as well as Grand Vitara for now, because you can see right there on your screen that for now it is actually almost a 5% cheaper versus Grand Vitara. Do remember that the new pricing for Maruti Suzuki launches will be announced soon, because from 22nd of September the company also has to adjust the prices of their variants across the models. But keeping in that view, the analysts are very much bullish that given the features, given the pricing, the company is expected to garner sales close to 4,000 to 6,000 units per month. And that is exactly what even Nomura is highlighting, because the combined sales from Grand Vitara as well as Victoris, they are penciling in a 15,000 sales per unit. They are bullish that the company is expected to do better, and even the company itself is confident that some of their competitors which have offering with diesel heavy portfolio, they can benefit out of that. For Nomura, they are currently targeting in a 9 to 6% YOY volume growth, maintaining their neutral rating with a target price of 15,031 rupees. But all in all, it's indeed a very aggressive pricing coming in for Maruti Suzuki Victoris. Back to
Right. Thank you so much, Srishti, for all those details on Maruti Victoris. But then let's move on, and very important cues to watch for tomorrow's that will impact our market trajectory also. First come first, we have the US FOMC rate decision that we'll be waiting for. Apart from that, a couple of data coming in from UK, which will be the CPI data, retail price index, and as far as Eurozone is concerned, we'll be waiting for CPI data and also ECB wage tracker. Early in the morning, we'll be up with the trade data from China, again a very important cue. As far as global earnings are concerned, General Mills will be issuing their global earnings data. We'll be also looking at some corporate actions, trade ex-dividend from Garver High-Tech Films, KRBL, Rights and Shilpa Medicare. And lastly, to buy shares, companies which are eligible for dividends, GMDC, Hindustan Copper, Jamna Auto, Shakti Pumps, SJVN and Venus Pipes. And also, companies whose AGMs would be on radar and in focus: PNB Gill, Subros, Astra Microwave, Esther Energy and Sandur Manganese. Also, IPOs definitely on the radar. VMS TMT opens for subscription tomorrow, and also we'll be looking at the debut coming up from Shringar House of Mangalsutra, Urban Company and Dev Accelerator. So the street will be very watchful on this. Key events as far as global is concerned: Donald Trump continues his visit to UK. ECB President Christine Lagarde to speak in Frankfurt, and deadline for TikTok's ban enforcement will also be on radar. And with that, it's a wrap on today's Your Trade session, and a goodbye from me and Mansi. But for all the information on economy and world, stay tuned to ET Now. Thank you so much for watching. Bye.